Hey, very good afternoon to all our viewers. Welcome to Closing Trades right here on ET. Now, the last hour of the session, and for the market, this seems like a good session in trade, particularly on the back of the fact that this is the third consecutive day in a row that the market has seen gains and multi-month highs, so to speak, really for the index. The year-to-date picture will also come up for you on your screens, but the key talking point is what the market has done in the session, pretty much trading at the high point of trade, coming off just that wee bit, but above 53.50, which is important.
Yes, indeed. Lots of individual stocks have done extremely well. The likes of Hindalco, Jindal Steel, Tata Motors. RIL perks up 1.5%, so that one has done okay too. Infosys continues to shine in today's session. Not too many losers, mind you. Bharti Airtel, of course, on the back of the numbers that have come out and the disappointment thereof, is down 3.5%, but more or less you've had gainers in the session. A broader end of the market as well, punctuated maybe by losses to the Indiabulls group after the Veritas reports. So, of course, those stocks have bounced back from the lows of the day. So, look at any of the Indiabulls group stocks, Indiabulls Real Estate, Indiabulls Financial, or Indiabulls Power. They have bounced back quite well from the kind of lows that they hit, but still under a bit of red. What has done well in the broader markets, the fertilizer stocks are doing extremely well. So, rip and roaring, Chambal good numbers as well. So, that's doing okay. Work hard. We're talking about momentum, so Wockhardt, Jubilant Foodworks, both of these have had a good day. Aban Offshore is up close to 2.5%. Bajaj Finserv knocks in another 2.5%. So those are some individual stocks which have done extremely well. But I think amongst the stellar moves that have come in today is in the large cap M&M, and a stellar set of numbers as well, Tanveer.
Oh, absolutely. I think even when we look at some of the brokerage calls that have come in on this stock, the rally has been primarily led by earnings, in which sales growth, of course, has surprised. So the company has clearly beat expectations, both on the sales front as well as profitability. What remains to be seen is the sustainability. I'm not sure whether M&M still becomes the preferred choice for most brokerages, but the recent notes that we've got post the earnings suggest that definitely there's a bullish view on the stock post earnings. So 4% higher on M&M, 724, big talking point all of today's session. Let's touch base with our guests then, as always, get in a quick perspective on what Mitesh and Ashwini are recommending this afternoon and how are they reading into this multi-month high that the market is making, and also this trade above 53.50. Ashwini, come to you first. Your thoughts on the third consecutive day of gains and whether we can actually sustain these?
Well, the next say 30-40 points from say about 53.60 to about 5400. If the market starts moving beyond these levels, then in my opinion, something will start changing longer term, which basically means that a trend line, which started from about 63.30, went through 5600. Now kind of is, in this 53.70, 5400 zone. So if we start closing decisively above 5400, then a market which was contracting where we had, higher lows and lower highs will suddenly tend to break out. Now what would trigger that, I don't know, but that breakout would be powerful enough to give you a big rally on the upside, and maybe this sideways market is coming to an end. That big trend line on a corresponding basis, the bank nifty is already trading above it. So I think next 50 points are extremely crucial, and whenever they are taken out, I would think the psychology of the market would change for the medium term. Having said that, today's BTST calls are Chambal Fertilizer, buy with a stop about 69, target of 80. Reliance is a buy with a stop about 790, target of 815. And Aban Lloyd is a buy with a stop about 397, target of 420.
Mitesh, what's your sense? What do the charts suggest? We keep on going up unabated. Stocks like Reliance ate the up. Does it last? And what are individual stock trades?
Because I think I would agree with Ashwini. I think very, very important point he has made technically is that we are possibly, the market's kind of peaked out at 6,300 2 years back. I think that trend line, if gets violated, I think, which is at about 53, 70, 80 odd levels, you would possibly see this entire up move fold into slightly stronger uptrend, and we have talked about possible targets of 55, 70, 80, but they could also be exceeded on the upside. So I think we are closer to very important levels, and typically I would wait for a weekly closing above that or 2 daily closing which are consecutive, to have some kind of confirmations. But at times you also need to take a call on the fact that broadly, I think, if the breakout happens during the week, you don't want the breakout to possibly move up by 100, 200 points and then wait for the closing of the week. So overall scenario still is pointing towards the breakout. So if the market starts trading above 5,400, I think, possibly we would again start trading aggressively on the long side. For the time being, while we are trading on the long side purely because the stock structures are good, we are not over the top aggressive, because as I mentioned earlier, I think we are very close to those levels where an important breakout can take place, or possibly we might have some days of consolidation, given the fact that last 3 days we have rallied into this important technical point. For the timing, I've got 2 buy calls. One of them is on Hindalco, which is at about, which is moved up slightly, but I think around 122 can be bought with a stop at 119 for a price target of 128. And the second one is HDFC. This stock is very close to getting into its all-time high levels, which are around 740, 742. So, but marking that as the first target, I would suggest for the time being buying with a stop at 714. If we see the stock trade above 740, 745 levels, my sense is that this is a stock which can give another 10% purely on the fact that it will break out of an 18-month-old consolidation.
Actually, before I go to Avinash Gorakhshekhar, he joins us as well to speak about M&M and a couple of other standout performers. Just pull up the stock, pull up the price of the HDFC warrants as well, because those have a higher beta, and of course the return percentage would be much higher on an HDFC warrant. I think it should be somewhere around 100 or just about that level. We'll get that going. 117 now, 4.5% higher. Mitesh, would that be a trade for a smaller ticket player instead of HDFC, maybe going for an HDFC warrant?
Not at this point in time, though I agree that it will be a higher beta stock in terms of percentage change, because it gives you right to buy, I think, at the price of about 600 adjusted for all the splits and corporate actions. My sense is that once the HDFC Limited breaks above 740, 745, I think that's the best time to get into warrants. For the time being, you might just want to, wait it out. The warrant this week itself are up about 25% and are close to levels of 120, which historically have been supply points for this instrument. And I think, just wait for the HDFC stock itself to give a breakout, then buying into warrants could be a very smart strategy.
Okay, we'll watch out for that. HDFC warrants, a stunning up move, must say. 3 months ago, less than that, was at a 52, 53 kind of level at 117 right now. So good going for that one in trade. Okay, let's get in Avinash Gorakhshekhar with his sense of the markets as well. In a bit, we'll also get in Mr. Sethuram Iyer of Daiwa to speak about what he believes is going on currently in the funds industry. Avinash, good having you. Thanks much for joining in. And no one would be more enthused as an auto analyst. I'm not saying you're one. I'm just saying any auto analyst on the street would be really happy with the kind of performance that M&M dished out today. Surprise on all counts. The farm division has also performed exceedingly well, and the margin performance much better than expected.
Yeah, I think Mahindra & Mahindra has actually surprised the street, positively. I think most people expected numbers to be either flattish or marginally, better than the previous quarter. I think what is really important going forward, Neeraj, is I think what is the kind of volume growth the management is confident on the tractor unit, because I think this is one segment which actually contributes significantly to the EBITDA. And my sense is, I think, the real picture of a bad monsoon would be visible only possibly by the month end. So I think clearly after seeing that picture, one could get a sense as to how bad the impact would be. But I think nevertheless, on a consolidated basis, the business model for M&M is extremely robust. And my guess is, I think, going forward also, despite maybe some underperformance on the tractor side, we could see definitely, a decent kind of growth, from M&M coming in.
On the charts, Ashwini and M&M, 4.5% higher now, 727. What does one do here?
It's breaking out of a sideways zone, and chances are that Mahindra could easily get towards levels of 750, 760. And again, it's one of those players which have a hangover of bad monsoon and still moving higher. So probably there are short positions which could propel it, higher than 750, 760. So definitely it's a buy given today's action. And now you keep a stop about 710.
727 on M&M and counting. So really good show given by the big boy in today's session. That aside, I just want to quickly pull up how Tata Motors is doing, because that has been another stock which has zoomed into orbit. Before we take that break, Mitesh, you had a buy call on the Tata Motors DVR yesterday, has performed very well, both on Tata Motors and the DVR. What's the call now?
Broadly, I would remain positive. I think, I think the rally just started, but we have had 3 days of up move for both the Tata Motor as well as the DVR instrument. You might see some kind of consolidation, but I think overall I have looked at a first price target of 142 being hit on the Tata Motor DVR. So that's still about 5 to 6% away from current market price. And my sense is that after 142, there's a good chance that the DVR can hit towards targets of 153 on the upside. So there's significant upside left. People who are holding it out, I think should look at booking some profits around 142, look for decline to again get into around 135 odd levels and keep holding whatever they are. My sense is that the bounce back has just started and could be significant from current levels.
Okay, so that's really the view on some of the large caps, a few mid caps, and not everything is active. Look at the GVK Power, that hasn't come out with the best of numbers, so that is down in the session. But fertilizer is piling it on. Jubilant Foodworks and Wockhardt are doing extremely well for themselves as well. So there are a few stocks which are doing extremely well. We'll take a quick break, come back in moments from now, get in one more voice in Mr. Sethuram Iyer. But for now, here are Nandakumar Surti, MD and CEO of JP Morgan Asset Management, who finds India's valuations attractive and is bullish on financials, private sector banks and the cement companies.
When you say that the valuations are looking attractive, this is coming on the back of an earnings growth which is at 8 to 10%, and this is coming on the back where the input cost for the industry is looking downwards. Commodity prices at the margin are correcting downwards, oil prices are down, interest rates on the back of general improvement in liquidity and 150 basis points rate cut by RBI. Interest rates are looking towards a journey which could be softer in the next 12 to 18 months. Monsoon will have its impact on growth as well as on inflation and it has a potential of disturbing growth by 0.25 to 0.5 depending upon how bad the monsoon can be, and it is going to have its impact on inflation. But the positive side of it is that Government of India has reasonably good food stocks. A lot of credit is locked into these food stocks, and now they can be released into the marketplace to control food price inflation. And what it does is also frees up precious capital. Defensives at the margin, particularly the FMCG sector, the valuations were getting a bit stretched. So some of the sectors we are looking to, on the consumer side, we have looked to cut our positions. Financials continues to be reasonably bullish within our overall scheme of things. Within that, private sector banks is a bullish theme at this point of time. Cement is another theme that we have gone long over the last quarter or so.